Hi, I am Rahul Singh, CIO Equities at Tata Asset Management. Firstly, wishing you and your family a very happy and prosperous new year from Tata Mutual Fund. We all know that the markets in 2019 will have to contend with a host of risks, global as well as domestic, which balances out the positives like accelerating earnings growth and robust consumption which we are witnessing today. So while in the medium to long term we remain positive on equity returns given earnings pickup, near term could remain range bound and extremely volatile. In addition, investor returns generally have been less than fund returns due to emotional reactions to the market by investors. We have time and again seen that investors end up taking higher equity exposure at higher valuations during the bull run and cut exposure during bottom valuations. In reality, investors should be doing just the opposite, i.e., buying more equity when valuations are low and selling when valuations are high. Thus, there is a need for a dynamic asset allocation fund which is able to swing between asset classes without the investors having to do it themselves. Tata Balanced Advantage Fund takes care of both the factors. 1. The fundamental risks arising in volatile markets, and 2. Cutting emotions by determining equity exposures through valuation-based discipline. Tata Mutual Fund BAF model works on price-earnings-based valuation bands that drive equity allocation between 40 and 80%. Our model is different and enhanced through two additional features. 1. It takes into account the forward PE multiple in addition to the trailing PE, which we believe factors in the changing earnings outlook in the current financial year and the next financial year, and hence is a more accurate representation of how the market behaves versus only a trading PE model. Second, we have also built a rule-based additional 10% equity allocation both on higher and lower side using a combination of factors like volatility, momentum and global markets. We believe that using these indicators makes the model more robust by taking cognizance of the technical factors in addition to the fundamental PE-based equity exposure bands. It may help us make better returns, especially in directional markets. Our back-tested data of the model suggests the same, as BAF model outperforms the basic PE model across all calendar years since 2006. One last thing. Given that minimum equity exposure of 65% will be maintained at all points of time through use of equity arbitrage, the scheme will enjoy equity taxation. Once again, I would end with wishing all of you a very happy new year and happy investing in 2019. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.